This is Ron Brown. I'm going to do a series of videos with my basic end-of-day scans and also my basic intraday scans. And at some point, I'll get into market analysis using the end-of-day scans, but I'm going to primarily focus on these views, filters, and combos and explain what I'm doing with them. Now, I don't plan to make lengthy videos. I don't want any of these videos on these individual subjects to be over 15 minutes because I think that is about the right length of time to absorb each one of these or each one of these subjects. In addition to these videos, I'm going to hold question and answer webinars, which I will do occasionally. I have no set timetable for that, but I'll do that. The webinar room will be open to 100 people at a time. So, but even if you can't get in, if there is that much demand, if you can't get in, each session will be recorded and will be posted. Now, when I do the videos, I plan on comparing the end of day to the intraday, and you can see that the intraday scans, there are more intraday scans than there are end of day, and I'll point that out as I go along. But for example, I'll compare the scorecard end of day to the scorecard intraday and show you how they work together. Before I get into anything about these views, filters, and combos, I want to take a historical look at volume price analysis or volume spread analysis. They are one and the same, just different terminology, and there are a few differences, and I'll point those differences out as I go along. So let's move over and take a look at the historical evolution of volume price analysis. Tape reading or volume price analysis, volume spread analysis, originated with Richard Wyckoff. He was a tape reader, and he observed that volume and price interacted, and that's how he was able to read the market. He was very successful at what he did, and his approach was based upon price and volume, support and resistance, and some other techniques. Now, this is his original course. If you look at the lower center, you can see that this is copyrighted 1931 to 32 and 33. If you do a search for this, you can find it on the internet. Now, it's several pages and it's in depth. Parts of it are still relevant today, but this is where it originated. So I wanted to point this out to you. And then the next, I should not say the next, but one of the primary practitioners of volume spread analysis was Tom Williams. Now, Tom Williams passed away last year, but he was a advocate of volume spread analysis. Now, that was his terminology, and he was the first one to incorporate it into software, and that software is TradeGuider software. I'm sure you've seen it advertised. They do a lot of webinars and so on, but it's a very expensive software, and to tell you the truth, HGSI is a better analysis software for analyzing volume price analysis. But this book is available through the TradeGuider site. I think it's $10. It's certainly worth reading for Tom Williams' concepts. He was an excellent teacher, and like I said, it is certainly worth purchasing and reading. Now, the next view is this is about Karthik Marr, I believe that's how you pronounce his name. He wrote the code for Amy Broker, and he pretty much followed Tom Williams' methodology, not exactly, because that information in TradeGuider is all proprietary, but Karthik did a very good job of incorporating it into Amy Broker. And this can be found on the internet also. It's VSA Basics by Karthik Mar, or just search for VSA Basics by Karthik, and you should be able to find it. This is probably 30 or 40 pages long, and it's free. And it's certainly worth reading, just like the others are. And then a more modern interpretation of VSA is by Anna Colling. Now, I've recommended this book to many people over the years, and let me bring it up here. Here it is. It's a complete guide to volume price analysis. You can buy it on Amazon, the digital version, for $4 or $5. Certainly worth reading. Now, she calls hers volume price analysis rather than volume spread analysis. There are some differences. Anna, when she is looking at the spread, she is just using the body of the candle and not the wicks. You'll find that in her book. It's the way she defines it. We use the entire length of the candle for the spread, and so did Karthik, and so does Tom Williams. So that is more the convention. I don't know why she decided to use just the body here as a spread, but she did, and that's fine. It works for her, but just remember that if you read this book or when you read the book, and I recommend it wholeheartedly. It's an excellent book. Another thing Anna does is she has written this book from the perspective of the market maker or the smart money and so on, and she terms what I always termed a selling climax, where there's panic selling, as a buying climax because the market makers are buying at that point. And just the reverse, or the opposite, on the what I call a selling climax, when a stock is running up, everybody cannot wait to get into it, and there's a feeding frenzy, and she would call that, or she terms that as a selling climax because the market makers are selling. It's a little bit confusing, but those are a couple of the main differences. Other than that, well, it's just a difference in terminology is all it is. Excellent book, though. I recommend it as I have for many years now, and you'll learn a lot from that. Now, in the software itself, in the HGSI software, if you do a search for VPA analysis, you're going to find more information about how HGSI interprets and uses VPA. We use the terminology VPA, but like I said, there really is no difference in the concept. There is a difference in terminology sometimes, especially between Anna and Tom Williams and Karthik, but we pretty much follow the, or HGSI I should say, pretty much follows the standard of Tom Williams and Karthik as far as using the entire body as the spread. And as I go through these videos, I will point this out, why I think it's actually the preferred way to do it. Now, if you're looking for definitions of the different flags and signals, just scroll down to the bottom and everything is defined here. Now, I don't really think you have to spend a lot of time on this because the explanations are in the charts when we get to VPA signals in HGSI. But if you want the reference, this is where you find it. One thing you need to remember about VPA, VSA is that it's been around a long time. And as Anna points out in her book, nothing has really changed over the last 100 years in the market. Of course, we have fast computers and software and so on, but the concepts remain the same. So it's not like there is this new indicator which will guarantee you a profit. It's not like that. It's based upon common sense, based upon which is based upon support and resistance, price and volume, trends, and so on, and you'll see that as I go through the videos. That's it for this video. Thank you for listening, and now I'm going to get into the actual use of volume price analysis in the HGSI software.